Hello everyone, Kim here, and today is Thursday, March 27th. It's about 10:51 a.m. Central Time, so it's about 2 hours and 20 minutes into the market, and I wanted to do this video. I have not done video for my blog followers and YouTube subscribers, and so I thought I'll do one. And usually, most of you attend my live midweek update that I do on a semi-weekly or bi-weekly basis. And well, I canceled live midweek update last Wednesday. I had something to do that afternoon, that evening, and I did promise that I was going to do a video to kind of just let you guys know what I think about the market and things like that. And well, I wanted to wait. That's actually the reason why it took me kind of a year, month and a half or week and a half to do this video. But I wanted to wait because there were certain signals that I was looking at. There's certain things I was looking for, and we are getting that signal. And obviously something that I put a lot of weight on. Let me just put some of these moving averages here real quick. I wasn't just prepared for the video here. I just felt like I wanted to do one right now. Just kind of let you guys know what I'm thinking here. But anyway, we're currently looking at S&P 500. It is very important, and we have been really looking at other things as far as overall market weakness is concerned, because even S&P 500 tried really hard to stay above this level. Something that I talked about is as long as we're above that level, perspective is, or the benefit of doubt does, continues to go to the buyers, because, well, this is a perspective level. So the perspective is, well, buyers are still in control as long as they can have to protect this level, defend that level, right? And so that, and that's what we've seen in the past, and that's kind of what we have to respect, that level. As long as we're above that level, this thing continue higher. However, the difference was we have a lot of like cautionary signals there's looming around, and because of that, I closed all of our equity positions, and then we started focusing on other sectors, other markets, and things like that. So, but what I wanted to really talk about is why I think this market could continue lower, and possibly S&P 500 could come down to about 173-ish. Probably retest this 200 SMA there. And let me first go. Let me actually first talk about financial, because you guys probably seen my post. Financials insinuation, and something I talked about was basically this. We have this channel. We have this channel, rising channel going on here, and within a channel, what happens is it gets to a certain point and then it comes back down, and for that reason it oscillates, and that's why it creates this rising channel here. And so this support becomes very prominent. This resistance also becomes very prominent on unyielding, because once we hit that level, we might grind at that level, we might try to push through it, but what happens is we just don't have enough power. We just don't have enough push power to push higher. And it's interesting to note that by financials just love to just really, it has its proclivities and tendencies to reverse with double top here. You can see that here. These are what I call mini double top. They're not traditionally known those these kind of double top, but those are mini double top. You can see that there's a neckline right here, neckline right there, neckline right here, and this one neckline is not up to about 50 EMA there. So, and once we get the neckline is taken, we're not able to make new highs after the double top has been formed, and then what happens is we start making lower highs, then the market corrects. But one thing that I talked about in my post yesterday was that it was the financials. It is normally, generally, usually it is the financial that it is going to lead the market. I mean, if you want to see market going higher, you really generally want to see banks do well, and if you want to and you see banks seeing weakness, that is also another insinuation that it could the market could lead to the downside. And so obviously something that I talked about is the last time this was insinuation there, and then that was insinuation there, and that actually, those times, if we study both, this right here, where's my cursor, right here, in both times these levels, what happened was, this was when actually S&P 500 was still holding up very well, still holding up the pivot level, still holding up the perspective level. You know what I mean? Same thing here. This was, January 23rd. If you actually looked at January 23rd on S&P 500, it actually pretty much looked very, very bullish. But what happened was, well, once we, kind of broke that mini double top and we had a confirmation on financial first, and then what happened was S&P 500 following the path of where the financial is going. Well, right now what's happening is that what I really want you to pay attention to right now with the financials is basically this, is that we have this kind of a rising uptrend there. We had something similar right here, and with the same thing similar here. And so basically when we break below that level, and including that double top, mini double top we've been talking about here in this video, we had the mini double top, but once that support is broken, what we've seen was the last several occasions that market got its correct, had its decline, and we're talking intermediate term. We're not talking the primary trend reversal or nothing like that. Intermediate terms, I'm talking about this right about here. And so, so we broke them below that is, and doesn't mean that it's 100% the market is going to correct, nothing like that. But there are other insinuations looking at other market indices that I do think the market is going to come lower. But, just currently looking at the financial sector, that's what is insinuating. That is what is implying. That is saying that it has a good probability, there's a good chance that the S&P 500 could see more decline there until we can come back down to this channel support there. This is what it means to be a channel. Channel means it goes up and down, up and down, up and down, right? This is kind of what it has been doing. That's how it up, down, up, down, up, down. I mean, generally it is making higher lows and higher highs looking at a big picture, but it is not like really steady, silky smooth kind of a bullish run. But in a big picture, as far as the primary trend is concerned, we're in an uptrend. Primary trend is concerned, we are still in an uptrend. So we're just talking in the intermediate term. These pullbacks within this channeling action there. So looking at financial sector there, obviously we do have a 50 MA coming around here, and so that has been acting support. There's something to watch. But once I think that 50 MA gets taken out on the financial sector, and then we kind of have this confirmation of this double top, I think that the sell-off is going to increase, or at least the speed of it, and then we're probably going to come down to this 200 SMA there, which has been acting as support in the past. And then the question is, are we going to hold that level and then go back up? Does keep this channel going, or are we going to break that? That we have to reassess the situation when we get to that level. This is because, just same thing here. When we got up here, that the situation was, where are we going to break that resistance and possibly just break out, or are we going to roll over? And we didn't know that until we get some kind of a insinuation or some kind of signal that tells us that possibly, well, we may not, and we may come back lower. So when you get down here, instead of just buying the bottom, they're calling the bottom there. Instead of just maybe see what it's gonna do, how it's gonna react. It's not hurt to wait for a couple more days for a confirmation of a bounce before going back long there. Same thing with shorting. Instead of just calling tops here, it's okay to wait for a couple more days and then see where it's gonna do, and then and then get your short on. But so this is a financial there, and what I've been watching is really a Nasdaq, because Nasdaq really have been that kind of a leader. Because I remember every time Nasdaq is always the first one to make the new highs. So you guys know what I'm talking about. Every time before Spider makes new highs, Nasdaq always seems like it wants to come up and make the new highs. So it's always been that leader. You always have been that anxious one. You've always been that one of those index that just wanted to go up there and just kind of touch that all-time high before anybody else. But something has changed, because it was the Nasdaq broken this pivot level that we have been talking about, that I have been talking about there. Because the insinuation was, as long as we're above that level, benefit Dow continues to go to the buyers, because that's exactly what it has been respecting. This is what I call perspective level. This is really a pivot level. What I mean by pivot level is old resistance becoming a new support, old support becoming a new resistance. Either way, but these are the levels that I look at. These are the perspective level. I call them perspective level because the perspective is, as long as we're above that level, we have to give benefit of doubt to the buyers. But then what happened was on March 24th, Nasdaq was the first one to break below that level, and that tells you something about the Nasdaq, because like I said, Nasdaq is always the anxious one to just get up there before Spider does. But for the first time now, Nasdaq now is going, it changes direction and want to come lower before S&P 500 does. So maybe that was the implication, maybe that was the insinuation. Because if we go March 24, if we go to Spider on March 24, you can see this was a March 24 right about here, which means, well, we were still above this pivot level. We're still above this perspective level, which means benefit of doubt still went to the buyers. Benefit of doubt still went to the buyers because we have not yet broken that level. And right now, today, we're just kind of hanging out there. We just not resolved anything yet. We're just kind of right on that line, kind of at 50 MA acting as support too, probably because the 50 MA did act as support in the past, but it has been compromised. You can see that really nothing really happened in the last two times when 50 MA was encountered with the S&P 500. So maybe that's some kind of speculation happening there, but really, we're still right on that level. But like going back to Nasdaq, we can see that Nasdaq its first insinuation was that we broken below that level. Not only broken below that level, we got below 50 MA, and that's something to note there, because like I said, Nasdaq always been the very, very strong one. It always seems like the one that it's just very, very resilient. It just don't want to come down. Last time when Spider, get this, last time Spider had a pretty good sizable decline. We broke on this level and that level. We broke below 100 SMA. If we look at Nasdaq there, Nasdaq really hasn't, it had its share of decline. It did, I guess, but compared to Spider, I think it wasn't. Yeah, I thought it could have gone lower, but it didn't. So it was I think that just comparing that price action. It's interesting that when it seemed that Spider came much lower, much faster manner. It seems that Nasdaq was holding up well, but now that Spider is trying to hold up well, or trying to save its life, well, Nasdaq already kind of pooped all over here and just got below this perspective level. Another thing I'm looking at here is Russell, because Russell is actually troubling for Russell, is because first thing is that, well, this right here, what we see right there, what we see here is that obviously this massive rising uptrend, right? This massive rising uptrend, this very prominent, preeminent, because every time we hit that level, this thing gets respected, right? You know what I mean? So this resistance support, is for how long? It has been over over a year period of time, and that has been compromised once. You can see that we broke below that level. That didn't mean this market was going to continue lower. We needed to see some lower high. We didn't see that. It just made new highs. But here's a question. The question was, well, sometimes what happens is with this long drawn out channel like this, what happens is, then it's not mentioning that it has been respected just right on the dot, right? Every single time we hit that level, we just bounce, and that 50 MA been a champion, right? Every time we get to that 50 MA, this thing bounce, and has been compromised once. But when we get to this kind of a long drawn out, prolonged this channel happening, what happens is when it gets compromised once, and then after that you kind of start to question integrity of this uptrend support, of this rising uptrend. But what happens is many times it goes back up and start respecting it again, and then maybe this thing can go up and do its business again. And I've seen that happening, where it gets compromised once, it breaks below that, but it goes right back up, makes new highs, and then we continue to, go back to what it has been done. You know what I mean? Just continue to oscillate in between those, channel rising support there. But what happened was, obviously, well, not only we broke that channel rising support yet again, but we also broke my perspective level. Remember this pivot level that I called perspective level over this new support, which means, well, as long as we're above that level, we give benefit doubt to the buyers. But when we're not above that level, benefit doubt does not go to the buyers. Good example is that, well, this was a perspective, we broke that, boom, right? So that's kind of what's happened here. But again, it was early insinuation. This was March 26th. That's what 26th, which was yesterday. It broke that again. Spider was still, Spider saw some weakness yesterday, but still it was above this this perspective level yesterday. So what we had was Russell insinuating the weakness there by breaking that perspective level yesterday. Not only that, breaking this massive very prominent, this rising uptrend support there. This is second time it broke that, because we broke that once, broke that second time. So that's basically at this point, we do not. It's very, very questionable at best, the strength, the integrity of this uptrend support. You know what I mean? This might not even, where character has been changed in Russell, where it might not even want to respect that at all after this incident. But I guess only time will tell. But for now, we did broke that perspective level, so that's definitely a cautionary signal there. So here's what I'm getting at. We'll go back to Spider here, and Spider is flirting with this level. So question is, can Spider be that index and put all this weakness on his shoulder and just march it back up? Or is this too heavy for S&P 500? Is this too heavy for S&P 500 where, Nasdaq coming down, the Russell coming down, well, financials coming down? Well, is that the burden that he cannot, hold, or he cannot carry? And is that finally it's going to come down with it? And I would have to say, because of, I'll say this. We take below, we're just right on this level. And, obviously, this thing can still get up here, but I would say that we get below 50 MA there. I would have to think that there's a more decline to be seen. Tomorrow's Friday, and then probably till next week, end of next week, possibly. And then after that, possible level of support, which I think is, at this level, I don't know if it's going to make a reversal, but at least possible level of a slowdown will be that 100 SMA on S&P 500 here, because last time, this was a level that did, had some support there. But, you can see that how here again, at this point, we attempt to bounce right under the 100 SMA, but that was fail. So again, integrity of that support on that 100 SMA is questionable best, but I'm guessing that we might have a little bit pause. But then I think if that doesn't happen, we're going to come all the way down to this 200 SMA, which is about 174.88-ish level. And that's also looking at a bigger picture perspective level, right? Because we looked at just this perspective level, which is a minor intermediate term. I will call it a minor term. And then we look at an intermediate term perspective level, which has been old resistance that had become support, and which that level is also coinciding with a 200 SMA. So I would have to say that I don't know if it's going to come any lower than that. So I think it will come down to about 200 SMA there, and then at that point on, we might find some bounce and then get up, and that's very, very important. From this point on, if this trend wants to continue higher, what you need to see is S&P 500 call there, go up there, and make new highs, which means by clearing this about 189-ish level. However, if it fails, if it does not make new highs, but if it goes up, and then it comes down to about 200 SMA, which is an intermediate term perspective level, and then it goes up maybe to about 50 MA, and then if it rolls over, that's the problem. You know why? Because not only we have equal lows here, we have now lower high. Do you know when we've seen that exact same, pattern there? Well, this right about here. A lot of volatility coming down is very similar to what we've seen last several days, and then finally flush, made a new lows. Isn't it interesting? We came to where? 200 SMA. Isn't that interesting? Isn't it interesting? It came to where? The previous support, and that's aligning and coinciding with 200 SMA. We bounced up. Isn't that interesting that we did not make new highs? We formed, well, I cleared all of that, but we formed double top. And then what do we do when we look at this big scale? Well, we put on an equal lows, lower high, and in that process, do you know what we did? We created this monstrous head and shoulders pattern, and then boom. And I know we are getting ahead of ourselves with that analysis, but I wanted to admonish you, should that happen, should this thing come all the way to 200 SMA and find support, and it probably gonna have some kind of bounce, and here is very, very important that we make new highs. If it doesn't make new highs and if it's rolls, watch out. We're gonna have some steep decline. But for now, we'll worry about that now. I'll admonish you then. I'll do some video or something then, but for now, I think what's happening right now is really S&P 500 really trying to just stay afloat, stay above, but we attempt to move higher. We do have a 10 and 20 EMA kind of crossing. Last time they crossed, well, things didn't go too well. But that's not really a big important, but 10-20 EMA crossing plus perspective a little broken, that is a more lethal lethal. What are the word am I trying to look? Lethal compound, right? That's not the word, but that's the meaning. Sometimes it's funny when you're trying to speak fast because I don't want to waste anybody's time. You just forget these words. Anyway, so lethal compound, right? So just 20 MA, 10-20 MA crossing there, it really doesn't mean anything as long as we're above that level. But once we break that, I'm not sure if it's gonna happen today or tomorrow, but should we get much below that level, yeah, then things could get hectic there. Lastly, I got some questions on Apple, so I will do Apple, and then we'll end the this video here real quick there. And obviously, many people ask me, isn't this a great setup, Kay? Because I respect that because you guys know that I trade Apple very very frequent manner, and but it was awesome setup. It was, and there's a reason why I didn't take it though, even though it was an awesome setup. Do you know why? Because the market was not condoning. If market had a lot of cautionary signals, I've shown you some of the cautionary signals on Nasdaq and Russell and financial sector, those things, but I was looking at other cautionary signals in the market before all that went down, before Nasdaq went down, before Russell went down, before financial went down, for about 2 weeks now, with some of the stuff that I'm looking at, some of the indicators that I'm looking at, some of the other markets I'm looking at. There's a lot of warning signals that because of that reason, even though I knew this was such a great setup on Apple, I didn't take it. Because what's going to happen is in Apple, when the market is not condoning it, it's going to suffer. I don't know if market is going to come down like this in 3 seconds. I don't think that's going to happen. But what could happen is we might just even though this is a great breakout, we might just kind of hang around here and then maybe consolidate. You know what I mean? Maybe if this is an uptrend, and then let's say if this is some kind of a some kind of a resistance right about here, this gap, this is earning gap fill here, resistance, we can just stay here for weeks until the market kind of resolve itself. You guys know what I'm talking about? So when you want to go long on the equity, especially if you're swing and position traders, and I'm not talking about day traders, you guys can do whatever you want to do, but if you're swing position traders, it is very, very important. It is very important that you want to time it correctly with the market. If market is seeing weakness, even the greatest setups, long setups can have a lot of difficult time. And so for that reason, I didn't take that trade. I was looking at it, I wanted to, but with that all these cautionary signals happening in the market, I didn't take it. And I think if market continues to have its decline, I think Apple is gonna just continue to just consolidate here. If we breach below this level, maybe come to about this level and then do something like this. But I don't know if it can go any higher as long as market is not moving up. So this is a reason why I didn't take the trade, and this is a reason why I think it's best to kind of wait for for market to calm down and for market to be in a healthy state where it's going up state. You know what I mean? And as far as long term is concerned, we're still in an uptrend. The problem is, we do have higher lows looking at the big picture here and higher highs. But then we might be kind of stuck here where it could be the range for a while until waiting for the market to have its resolution, right? So this is a reason why reason why that I didn't take this trade, and I think this is the reason why I'm going to continue. And this is the reason why I'm not holding any equity positions. Since 2 weeks ago, I closed all the equity positions out because of I forecasted there's going to be some warning signal happening there again. So if you have any questions, feel free to use a comment section on my blog there, just below this video. You can follow me on Twitter and talk to me there or on the blog. But hopefully this video can provide some helpful tips for you guys, and hopefully you guys can able to do well this week and next week. And I guess again, lastly, the level to watch is right this level. Spider still trying to get hold on to that level right on the 50 MA, so it will be very, very important. And one thing lastly I want to say is, if he's anything like back here, like 2011 May, you can see that there's a lot of volatility happening here, and that is a very similar sentiment. Just looking at the last several days, intraday volatility, you can see that this was a prospective level back then. What happened was, even when we got below the prospective level, volatility continued and then finally got flushed. So what we can see in S&P 500 is that we can continue to see some kind of volatility, even though it breaks below that level, maybe trying to go back up, and then we continue in that, and finally before it flushes. And just what you need to watch is you need to watch the resistance level. But again, just because we get above the resistance level does not mean that it's bullish again, because last time the same thing, resistance, got above, doesn't mean we need to go up. No, we don't. And then what happened? We just came right back down. So you can see that when the volatility happens, it may not perfectly respect this minor resistance level, so I wouldn't gauge too much into that. But what I would gauge into is lower lows and lower highs. Minor term. What I mean by it is lower lows or lower highs. These are lower highs, and then lower lows, and then finally kind of gave out and then came down to this level where there's a 200 SMA there, and that might be what's happening right now, where it gets volatile for a little bit, comes down to 200 SMA, and then bounces up there. Have a great day, and good luck trading. We'll talk soon.